Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good afternoon, everybody. This is hitting here in 30 seconds. I should have started a little bit earlier. I guess I don't know what my deal was. Anyways, Treasury is still kind of hitting up on their highs, and I was actually seeing a couple of market orders trying to get in just before the announcement. So it still kind of looks to me like they're expecting something dovish to come out here, but we'll see what happens. This is all just I'm basically gambling at this point. It's really pulled. Look at that. All right, here we go. No change. E-minis buying. Oh my. Oh my. Oh my. What's this? Yeah, Luga's just in time, right? I'm waiting for the text. Looks like they're gonna do the pretty wild ranging here in the E-mini, but look at the treasuries going. Well, this is a trade I have hypothesized, so I kind of tried testing it on. I tried back testing it and it had marginal success, but I didn't think that the data that I had was very conclusive, just on the E-mini. And now we're getting a very clear signal on both the Treasury and the E-mini, where they're crossing both of our lines. So I'm hearing a lot of information coming out from it. I'm not seeing the change. Oh, okay, here's the statement changes. Okay, so there's not actually a ton of changes here. The Federal Reserve will continue to increase its holdings of Treasury securities by at least $80 billion per month and of mortgage-backed securities by at least $40 billion per month until substantial progress has been made towards the committee's maximum employment and price stability goals. These asset purchases help foster smooth market functioning and help foster accommodative financial conditions. Yeah, and that's pretty much the only significant change in the statement itself. May I ask what charting you're using? So for the charts, I use NinjaTrader 8. Actually using the free version of NinjaTrader 8 at the moment. It's all of this action is actually bogging my computer down. Yep. Or I'll put it up over here so you can see. 70%. And you see that? That we're going to get. And we're going to get our fills over there. We'll see. I should point out that the cumulative delta since the event on the E-mini at least is net negative at the moment. In fact, let's just reset this thing over here so we can track that a little bit more easily. Did you defree? I think what you meant to ask was, are you using the free version of NinjaTrader 8? And the answer is at the moment, yes. I do have a NinjaTrader license because I'm a part of the NinjaTrader ecosystem, but I'm using Rhythmic Data and not on NinjaTrader as my brokerage, so I'm using their free version. And hopefully they don't ever fix it. Okay, so just a little bit of they're trying to dig it out here, but they're having issues at 60 or 88, I guess. Yeah. Should have taken off more contracts down here, and then maybe I would have added 25. Well, I should note something that I didn't mention that while we were gone. There was a news story out about a potentially significant allergic reaction to the Pfizer vaccine. And I think that that was why the market pulled back significantly. I think that this is all about the FOMC right now, though. Very much a rotation we're getting here. Quick rotations. I can see the yield curve steepened a bit off of there too. I want to see this one. Yeah, even on the 30-year steepeners all over. Okay, a little stop run there. and possibly a pivot. Zero Hedge says Fed is turning much more optimistic on the economy, and yet there's not a hint of tighter policy. Expect many questions on this and no tangible answers. Yeah, I bet. That is the way that tends to go, isn't it? Okay, so that is going to be a pivot there. Let's see volume come off of it. I bet you will here in the 5-minute one. You watch the silver price? Well, I have a gold up on over here, and gold is getting creamed. On one of my charts. It's not too strong though. 6J is just careening down, man. 6J coming down. Interestingly enough, though, some dollar strength, which is maybe why the E-mini is kind of struggling here a little bit. Got to be crazy to speculate still within the state. Yeah, I'm crazy. I'm being crazy. It's stupid here. Now the big order holding at 23.5. Is he going to follow him? Is that a spread trade? Any luck so far? I think that I've been very lucky today. I was feeling like my luck was running thin earlier today, but that, yeah, I held through that and it worked out. Now, not so hot on the E-mini. I'm thinking on the E-mini, I really should have. Well, you know, I was expecting them to pop back up again. I really should have trailed that one, but ooh, well. The Fed saving the QE twist for a double dip. There you go. Well, I don't know. I'm kind of reading some of these Twitter comments, you know, and I know that they're all tongue in cheek and everything, but how can you expect the Fed to be coming in and saying something incredibly like, we have so much money we're going to print, guys. Like the printers are just running day and night and we're turning them up and we've got a new one coming in from Europe. Like this is just get ready, buy all the things because we're just printing all the money. It's not going to happen because the economy is doing pretty good right now on its own. Okay, so some market buying coming in there, forcing it back up. So that last little spout of volume in the E-mini, I'm going to reset my delta now so we can track that. That was one of the most obvious pushes I've ever seen. But it looks like that the liquidity providers were holding against him. And the dollar is moving up quite. So now we were touching 90 earlier today, and now we're at 90.35. Well, they sure are chilling here in this area, aren't they? Uncle Sam Bucks. There you go. Oh, so they take 23, huh? Yeah, strong down tick in the 10-year there. Okay, well, 10 minutes to the press conference. Okay. Jeez. Oh, somebody was posting about Bitcoin in the Discord. I'm like, what? And they were talking about the Pornhub accepting it as payment. Chris says, too bad it's on demo. Yeah. Well, yeah, there's no, I don't think there's any way that I would have held that a position, especially not one that big, through FOMC. I have held a position through FOMC on micros before, and I was right, but they went down and hit my stop anyways. Oh, that wasn't even too long ago either. That one made me mad. That was like October. And like I made out of that one. Like I took my licks and then I got in again and made out like a bandit at the highs, and then it fell back down and just like careened down in the end. And I got effing lucky. And ever after that, it was like disaster. Like it did good, and then that was the peak, and then it was downfall, and I stopped trading it. And it switched back. You're able to muster 2K. That's good. Trading what now? Trading an E-mini? Who is Larry Cermak? I don't remember why I'm following him, but he is retweeting somebody. Oh, they did a poll and they asked, why is the price of Bitcoin hitting new highs? 0% think it's institutions are buying, and 100% think large holders are cashing out ahead of the crash, which they all know is coming. Oh, he has gold euro. Oh, gold euro. Oh, you in all three of those, I see. Well, the gold trade was good one, because gold took the hit. Gold was a nasty drop. And now, by the way, the dollar is at 90.44. So is this because the Federal Reserve is being less, how do we say? Okay, you know what? I think I'm going to have to manage this a little bit because we're getting close to that news. I don't know. They must have been expecting the Fed to be like super easy, super dovish, and they're not getting it. I don't know. My family is hounding me to buy Bitcoin. Yeah, if that was a top if ever, I tell you what, man. One of the I think when Bitcoin crashed, remember, like that was the peak of our channel when we live streamed for the first time, and I told everybody there in front of like 5,000 people while we were streaming that probably we're gonna crash soon, and I was right. And but you know what gave me the confidence to be able to sit there and say that in front of 5,000 people, aside from the model. I mean, the model is another thing, and I really do believe in the model. But I understand that even with the best model, the market can defy you for a while, right? No, it was because all of my raver friends were buying the Bitcoin. Like there was like these girls and people that don't know anything about money and have absolutely no business investing, telling their friends to go and buy Bitcoin. That's when I knew that it was like, okay, we've reached a peak of some sort here. You don't want to buy it? No. I mean, I wish I was long Bitcoin. Not gonna lie. I wish I was in it. Like, where was it that I could have gotten in at? I think it was like 8K, 6K, 8K. I was waiting for 1,000. I thought it was going to go to 1,000, or at least that's where my model calculated that it would be a good buy. But Bing didn't get there. Didn't give us a good buy. Yeah. Anyways, I wish I was long, but I'm not. I'm not going to buy it now that it's overvalued. Those are the one who shorts and longs who are cashing out are selling too. Yeah, exactly. Exactly. Like these guys all borrowed all this tether and printed all this tether to get in there. They want their money's worth, I think. Don't you think? Teacher vaccines emerge as a major hurdle for schools trying to navigate COVID. If you want to be a teacher tomorrow, I'll hook you up. What? So are they saying like if you got the vaccine, you can go and be a teacher? Except for that's not very good pay. Oh, my thing is done. Can you hear that? Oh, that's not good. Oh well. You're not supposed to hear that. Hopefully that doesn't get the stream taken. I don't think that they'll DMCA the Final Fantasy Victory song, but okay, what does it say? Why is that one so good and that one so bad? I mean, it's profitable barely. Barely. That's the sound that my my analyzer window makes when it's done backtesting something. Yeah, that's. Uh-oh. Oh no. Are we okay? No, I think we're okay. Oh, it's. Oh, okay. It was Jigsaw. We're fine. We're fine. Yeah. So that sound is you can set a sound effect for when a backtest is finished. So I wanted one that was a little long so that if I was in another room, I would hear it, because I'm often finding myself like setting it running 30 minutes and coming back. This is like all day. I'm doing this all night these days. And so I chose the victory theme from the original Final Fantasy. So that's what that was. So it is from a video game. Do you think the world will go to a Mad Max? No. I mean, that's interesting to think about, but I hope not, because I don't think that they'll have too much need for derivatives traders in a Mad Max economy. Have to find a new thing. More like Waterworld. Dude, I want to watch. My wife has not seen Waterworld. We need to go watch that. That's where. Okay, where are we gonna go look this up? Waterworld streaming. Where can I watch Waterworld? You can watch it on Amazon Prime. Oh wait, but is it free on Amazon Prime? Wait, let's just do it on Decider.com. It'll tell us. Okay, so all of the usual suspects, but it doesn't tell me if there's like a free place to do it. Oh, that's right. It's Kevin Costner in that one. We gotta watch that. Hey, it looks like they're pulling it out here. Maybe I shouldn't have gotten out. Oh well. No, you know what? I do want to get out because Powell's speaking. Oh, we should pull it up. I'm so dumb. Pay attention, Seth. So I really don't like trading during the press conference.
245,000 in November, and while the unemployment rate has continued to decline, it remains elevated at 6.7%. Participation in the labor market remains...
Kevin Costner didn't deserve all the crap critics gave him?
Although there has been...
What did they criticize him over?
Since the spring, we will not lose sight of the millions of Americans who remain out of work. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 5% at the end of next year and moves below 4% by 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector.
Over Waterworld, they just, oh really? I thought it was a good movie. It was interesting to me.
Created great uncertainty about the future.
Oh, look at that. That coming back up.
It has also left a significant imprint on inflation. Following large declines.
You see why I don't like trading the FOMC?
Picked up over the summer, but have leveled out more recently.
You just get these freak moves out of nowhere.
Affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective.
Well, let's see if we can lose all of the profits that we've made, all right?
FOMC participants rises from 1.2% this year to 1.8% next year and reaches 2% in 2023. As we have emphasized throughout the pandemic, the outlook for the economy is extraordinarily uncertain and will depend in large part on the course of the virus. Recent news on vaccines has been very positive. However, significant challenges and uncertainties remain with regard to the timing, production, and distribution of vaccines, as well as their efficacy across different groups. It remains difficult to assess the timing and scope of the economic implications of these developments. The ongoing surge in new COVID-19 cases, both here in the United States and abroad, is particularly concerning, and the next few months are likely to be very challenging. All of us have a role to play in our nation's response to the pandemic. Following the advice of public health professionals to keep appropriate social distances and to wear masks in public will help get the economy back to full strength. A full economic recovery is unlikely.
Oh, that was good buying right there.
It's safe to engage.
The E-mini.
Engage in a broad range of.
Look at that. Yeah. You know what we call that? We call that informed traders.
The entire package of our SEP materials at the same time as our FOMC statement. Included in these materials are two new exhibits that show how the balance of participants' assessments of uncertainty and risks have evolved over time. Since the onset of the pandemic, nearly all participants continue to judge the level of uncertainty about the economic outlook as elevated. In terms of risks to the outlook, fewer participants see the balance of risks as weighted to the downside than in September. While a little more than half of participants now judge risks to be broadly balanced for economic activity,
oh, I see.
A similar number continue to see risks weighted to the downside for inflation.
Waterworld was considered a flop. That's interesting.
Mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As noted in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve. So
they made $88 million
importantly on having longer
in the domestic box office, which was less than what they spent on the movie.
Statements with inflation.
But then they did come out profitable in the end.
Inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%.
Yeah, it is a break-even movie. But then they've made, surely they've made money on it since then, right?
And inflation outcomes are achieved.
Costner was very upset over it, huh?
Interest rates.
Can you believe I didn't get filled on that?
To maintain the current
those assholes
0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time.
Oh, they're going to break this high. There's going to be stops. Come on.
Policy statement. We will continue to increase our holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. We believe the increase in our balance sheet this year has materially eased financial conditions and is providing substantial support to the economy. Combined with our forward guidance for the federal funds rate,
Okay, well, they made a new high there. It wasn't all that traumatic.
highly accommodative as the recovery progresses. Our guidance is outcome-based and is tied to progress toward reaching our employment and inflation goals. Thus, if progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Overall, our balance sheet tools are providing powerful support to the economy and will continue to do so. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Preserving the flow of credit is essential for mitigating damage to the economy and promoting a robust recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances, such as those we find ourselves in today. These programs serve as a backstop to key credit markets and have helped to restore the flow of credit from private lenders through normal channels. We have deployed these lending
Another good
powers to
high.
an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although funds from the CARES Act will not be available to support new loans or new purchases of assets after December 31, the Treasury could authorize support for emerging lending facilities if needed through the Exchange Stabilization Fund.
Okay.
Time comes after the crisis has passed to look at these emergency tools.
Cloth Tiger says today is a Pringles day. Once it pops, it won't stop. I love it.
These are lending powers, not spending powers. The Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers are benefiting from these programs, as is the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we as a society should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic downturn is the most severe of our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed at the beginning of this year, and it may take continued support from both monetary and fiscal policy to achieve that.
Continued support, guys. Continued support.
That our actions affect communities, families, and
Do you hear that, Congress? You're going to have to pass a couple more
everything we
bills.
do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I'll look forward to your questions.
A little reloading there.
Thank you. Rich Miller.
Thank you very much, Mr. Chairman. Thank you, Michelle.
Yes, sir.
I wonder if I could start with the SEP. We have
Let's see if they've improved their setup since last time.
sees it falling to 5. Headline inflation is 1.2. The SEP median sees it rising to 1.8, and core inflation is 1.4, and the SEP sees it rising to 1.8 likewise. Would that constitute
Dude,
substantial
like,
further
did you see that guy's room?
maximum employment and price stability goals?
What is this?
Well, so we're not
It says 6 now. That's cool.
specific, associating that test with specific numbers at this point. So really the question is, what do we mean by that language? And
It's too late now. There's all this mess of papers on the floor. I'm like, dude, you're on television. Clean your office.
we'll keep monetary policy accommodative until
Seriously.
maximum employment and price stability goals are achieved, and that's a powerful message. So substantial further progress means what it says.
By the way, VIX targets are like way up at 37.20. So
Maximum level, and inflation is substantially
if this continues, there's plenty more room left in this.
adjustments to our purchases. I would also point out that by increasing our asset holdings, we see ourselves as adding policy accommodation. There will come a time when the economy does not require increasing amounts of policy accommodation, and when that time comes, and that will be uncertain, and it's, in any case is some ways off. So I can't give you an exact set of numbers. We will, of course, as we approach that point, we'll be evaluating that. And when we see ourselves on a path to achieve that goal,
Maxed short pain, right? I mean, like, any shorts are just going to get screwed over on this if that's just what's going on.
Gradually tapering the pace of purchases.
Although, if we do make all new all-time highs, I kind of start to wonder after that point, you know?
You mentioned the next couple of months are going to be very challenging, and
What's this?
asset purchases
What's this down in the corner of the room, dude?
increase the duration of the asset purchases at this time, given what you see as a very
You got like literally papers on the floor of your office, man.
Again, I would start with what we actually did at the meeting, which was we provided this guidance about the path of asset purchases, and I just went through what they
It frustrates me,
that we put forward.
all of the effort that I put through
And, you know, so
to make this stream for 24 people a nice stream for you all. And here these yahoos on television have this absolutely awful setups, unprofessional rooms,
and now we've done the same for.
unprofessional audio.
So
They ask stupid questions.
as the
They probably get paid way more than me to do it.
and as we've absorbed new developments in the medical.
I tell you, these guys, crooked ties, right? Well, Powell's tie is a little better this time. It's still kind of skewampus, right?
We think that the asset
Still a little skewampus.
important. We think that the
But you know what?
in
I'm really digging that color.
this
I'm really digging it.
guidance, that
I
those
mean, it's all gray, but
actual substantial further progress toward our mandated goals. We think that's important.
I always heard a messy room is a sign of genius.
important to have done. I would
Maybe.
that we also continue to think.
I think that a messy room on national television is maybe not a sign of genius.
Economy, financial conditions are highly accommodative, and we monitor a range of financial condition indexes. They're
Wait, you're gonna see the naked woman in the background office. Oh my gosh, I saw this thing from a Zoom call the other day, where it was all these not middle school, it was elementary school kids in a Zoom, and somebody's mom was naked in the background.
involve close contact. Those are not being held back by financial conditions.
Oh, it was bad.
The virus. And I'll close by just saying we do have the flexibility to provide more accommodation through the channel. You mentioned
Marty, how are you? I haven't seen you in a while. We're watching the FOMC meeting.
that circumstances could shift in a way that warrants are doing that, including by adjusting purchases. We are committed to using our full range of tools to support the U.S. economy to achieve our goals. We will continue to use our tools to support the economy for as long as it takes until the job is well and truly done. No one should doubt that.
Thank you.
Thank you. Nick Timoros.
Thank you. Nick Timoros, the Wall Street Journal. Chair Powell, a two-part question. What, if anything, would prompt the Fed to shift Treasury purchases toward the longer end of the
See, Nick, look at that. Nice pictures in the background.
And does your guidance today on asset purchases foreclose the
Audio is acceptable.
that you could at some point lengthen maturities while simultaneously tapering the monthly purchase amounts?
Well, Nick, on the first part of the question, I wouldn't want to sort of talk about hypothetical situations. We look at our overall stance of policy. We look at overall financial conditions. We look at what's going on in the economy, different parts of the economy. We ask ourselves.
By the way, can I say for Mr. Powell here, because they had some issues with the audio earlier on.
We feel
The
that
audio sounds great. You can't even see the microphone, so they must be using a shotgun mic now.
the economy could use
Is that a shotgun mic?
stronger accommodation.
Only Jay Powell is allowed to wear purple.
Right now we're providing a great deal, and we happen to think it's the right amount. And you mentioned I think
Shouldn't all of well, I don't know. How many of the journalists are wearing ties? We'll look at that.
but reducing the quantity, which is sort of what the Bank of Canada did. And
I think that if I was there at that press, I would wear a tie, but I wouldn't wear as nice of a tie as Powell.
say the views on that were mixed. Some thought it was an interesting idea, others not so much. I wouldn't say that that's something that's
Certainly wouldn't wear gray.
on the list of possibilities.
Thank you.
Oh yeah, none of them are wearing ties.
Thank you. Victoria.
No, he's wearing tie.
Hi.
Our friend from Fox Business.
I wanted to ask about the 13.3 facilities. Chair Powell, you've said that you accept Treasury Secretary Mnuchin's interpretation of the statute of the CARES Act on what should happen with those programs. So first of all, I'm curious whether under a new Treasury Secretary, you will accept whatever legal interpretation they put forward for those programs. And then also, given that there isn't a statutory requirement for you to have financial backing from Treasury for 13.3 facilities, do you have any plans for any future facilities that...
Do you think the algos read the type of tie Powell is wearing?
So on your first question, we really thought about that. We're really focused on. We have a lot to do.
Probably not, Lucas, but I think that we may find a good spot for investigation.
The second question is, sorry.
Do you think the stops are going to be at 3,700?
We would have the ability, certainly we would have the ability to do facilities under 13.3, in some cases with no backing, but we can't do any 13.3 facilities without the approval of the Treasury Secretary, right? But we did some facilities, I think one of our facilities this time didn't have any Treasury backing, and I think some in the round of during the global financial crisis also.
Finally.
So do you have any plans, like would you consider doing more facilities if that became necessary without Treasury backing?
I would just say that we are, we have the authorities we have. We will use them if they're needed, and if the law permits us to do so. We would always do that. We do not have any plans for the future about this. We're very focused on getting through year end. We've been very focused on the issues that are right in front of us, and honestly, we're not planning on anything or having any discussions about what we might do down the road.
Thank you.
Thank you. Steve Leisman.
Thank you, Mr. Chairman, and Happy New Year. I know how much you enjoy talking about fiscal stimulus, so let me ask you.
What is this in Steve Leishman's? This must be in his office.
Stimulus program in Congress. Is that sufficient? Is that
what is that?
You think that'll be sufficient?
Is that a light?
Finally, you talked about the idea of how concerning the recent surge is. I wonder if you could put some detail on that. How much concern do you have in terms of where could it
Happy New Year
to GDP in the first quarter as a result of this surge? Thank you.
Okay, so on fiscal policy, I would just say a couple things. The case for fiscal policy right now is very, very strong, and I think that is widely understood, I would say now. The details of it are entirely up to Congress, but with the expiration of unemployment benefits, some of the unemployment benefits, the expiration of eviction moratoriums, with the virus spreading the way it is, there's a need for households and businesses to have fiscal support. And I do think that, again, I think that is widely understood. So I think it would be, I certainly would welcome the work that Congress is doing right now. It's not up to us to judge that work. It's really theirs. And I don't have a view for you on the size of it. It's it's obviously a substantial bill. On the surge, so it's a really interesting question. We have, and others too, have consistently expected there to be more economic, that cases would hold, growth in cases would hold back the economy more than it actually has. So we've overestimated the effects on the economy of these spikes we've been having. Now this is so much larger that I think, and I think forecasters generally do think that that this will have an effect on suppressing activity, particularly activity that involves people getting together in bars and restaurants, on airplanes and hotels and things like that. And you're starting to see that. In the high-frequency data, you're now beginning to see that show up. And I think this is the case numbers are so high and so widespread across the country that seems like it must happen. Now, how big will it be? We don't really know. There are a lot of estimates. The general expectation is you're seeing some slowing now, and you'll see the first quarter could well be. What we said is that coming months are going to be challenging. The first quarter will certainly show significant effects from this. At the same time, people are getting vaccinated now. They're getting vaccinated, and by the end of the
See, you listen to that. He is excited. People are getting vaccinated.
people vaccinated, and so then how will that play into economic activity? Again, we don't have any experience with this. You have to think that sometime in the middle of next year, you will see people feeling comfortable going out. And
Oh, look at that reload at 3,700 and a quarter.
be probably quick to do that. Some are doing it now, without
2000s.
right, in many parts of the country. So nonetheless, my expectation, and I think many people have the expectation, that the second half of next year the economy should be performing strongly. We should be, we should be getting people back to work. Businesses should be reopening and that kind of thing. The issue is more the next 4 or 5 months, getting through the next 4, 5, 6 months. That is key. And clearly there's going to be need for help there. And my sense and hope is that we'll be getting that.
Thank you. Gina Smialek.
Hi, Chair Powell. Thank you for taking your questions. I was wondering if you could talk a little bit about house prices. They were mentioned in the most recent minutes as, potentially a valuation concern, especially as it related to your mortgage-backed security purchases. And you mentioned earlier today that
Setup's not
the housing
bad.
market looks more or less.
It's got books in the background. You get bonus points for books, guys.
And if so, what can the Fed do?
Have books. You want books in the background. Books are nice.
So we monitor basically just about every asset price in the economy, and housing prices are something that we've been monitoring. And you see them moving up. You see very high demand. This is the housing market that people have been expecting since 2010, and then not many when the pandemic hit thought, oh, this is what will produce that housing market, but it has. Now, I would say from a financial stability standpoint, housing prices are not of a level of concern right now. That's just reflective of a lot of demand, and builders are going to bring forth supply. There's also a sense that some of this may be pent-up demand from when the economy was closed, which would imply that once that demand is met, that the real level of demand will be more manageable. So it's a healthy economy now. We met recently with a bunch of home builders, and many of them in the business 30, 40 years, so they'd never seen the likes of it. But no, housing prices themselves are not a financial stability concern at the moment. We will watch that carefully, but in the near term, I wouldn't think that that's an issue that we'd be concerned about.
Thank you. Edward Lawrence.
Thank you for the question, Mr. Chairman. So, with the actions that you've currently taken, how do you further fight a slowdown that you're seeing? We talked about the retail sales numbers are a little bit sluggish this month. The unemployment, the job growth has slowed down.
See there, you see Edward Lawrence's tie.
Now squarely.
Well, that is a double Windsor, my friends.
There is more that we can do. Certainly, we can expand our asset purchase programs. We can focus them more on the longer end. There are a number of options we would have to provide more support to the economy. I would say, though, that in the near term, the help that people need isn't just from low interest rates that stimulates demand over time and works with long and variable lags. It's really support. We've talked about this as all of these government policies trying to work together to create a bridge across this chasm, economic chasm that was created by the pandemic. And for many Americans, that bridge is there, and they're across it. But there's a group for which they don't have a bridge yet, and that's who we're talking about here. It's the 10 million people who lost their jobs. It's people who may lose their homes. It's you see the many millions of Americans are waiting in food lines in their cars these days all over the country. So we know there's need out there. We know there are small businesses all over the country that have been basically unable to really function, and they're just hanging on. So, and they're so critical to our economy. So, and by the way, now that we can kind of see the light at the end of the tunnel, it would be bad to see people losing their business, their life's work in many cases, or even generations worth of work because they couldn't last another few months, which is what it amounts to. So, we have more we can do. And I think more the issue is we're going to need to continue to provide support.
Go again, please.
Of time because the economy will be
not that time.
In expectation,
Not that time.
At a fairly healthy clip by the second half of next year, but it's going to be a while before we really are back to the levels of labor market, the sort of conditions in the labor market that we had in early this year and for much of the last couple of years. So that's how I think about it.
Thank you. Thank you.
Thank you. Howard Schneider.
Hi, Chair Powell. Thanks for doing this. Thanks, Michelle. Two quick questions. One, on the vaccine, do you have or has the Fed modeled sort of a working estimate of when the U.S. might reach something approaching herd immunity? And secondly, if you could please connect with me the lack of movement on the decision to maintain the current pace and quantities of bond purchases with the fact that the SEPs are showing 3 years with inflation not reaching 2%. Some might argue that you need to do more to start fixing those expectations and to let this drift and say, we're going to miss our target for another 3 years. Doesn't show a very firm commitment to the new framework.
So in terms of the vaccine, yeah, we do estimates, but of when the United States would reach herd immunity, and they're going to be similar to what other people think. It depends on your assumptions, such as how many people will actually take the vaccine, and how fast will the rollout be. So it's assumption based on assumption based on assumption. But sometime it's possible sometime in the middle or second half of next year. I'm not going to try to be precise because it's just another estimate. Our people are very good, but they're looking at the same data as other people are, and so all the estimates are. It depends on what your assumptions are. But
Okay, so Treasury's still buying up there and coming basically back to where we started the FOMC at.
A couple things. Your second question, I think you have to be.
Oh, look at that, stacking at 27.5.
Inflation.
You're going to squeeze them?
Significant disinflationary pressures around the
Well,
world.
here comes, this is the Treasury close. That's why they're doing this.
Today, it's not going to be easy to have inflation move up. And
So it must have been too many people short. Let's see.
It took a long time to get.
Yeah, that's probably too much buying on this.
And we're honest with ourselves and with you in the SEP that even with the very high level of accommodation that we're providing both through low rates and very high levels of asset purchases, it will take some time because that's what we believe the underlying inflation dynamics are in our economy. And that's sort of one reason why we're concerned about inflation is that we see that, and that's why we have adopted the flexible average inflation targeting framework. That's why we're aiming for an overshoot. But we're honest with ourselves and with the public that it will take some time to get there. In terms of, would it really speed it up a lot to move asset purchases? I don't think that would really be. I think it's going to take a long time, however you do it. And we've been having very long expansions since in the last several decades because inflation has not. The old model was inflation would come along and the Fed would tighten and we'd have a recession. Now, inflation has been low, and we haven't had that dynamic, and the result has been 3 of the 4 longest expansions in modern history, in recorded history. So, we're thinking this could be another long expansion, and that we'll keep what we're saying is we're going to keep policy highly accommodative until the expansion is well down the tracks, and we're not going to preemptively raise rates until we see inflation actually reaching 2% and being on track to exceed 2%. That's a very strong commitment, and we think that's the right place to be.
Thank you.
Thank you. Chris Rugaber. I'm sorry, Mr. Chair.
I'm just going to add.
He wasn't done. He wanted to add something.
Look at inflation compensation and at the survey measures of when the Fed will lift off. Everything has moved. There have been significant movements since we announced the framework in the direction that is consistent with the framework being credible to market participants. So I don't think it's something that I'm actually pleased by the reception it's gotten in markets, and markets have moved in ways that suggest it is credible.
Thank you, Chris.
Hi, thank you. Yesterday, I guess the Fed said that it's joining the International Financial Greening.
Well, that's a pretty bad move against me here, isn't it?
You could expand on how the Fed is thinking about climate change.
I'll say ticks.
How it might affect Fed policy going forward. Specifically, I think Janet Yellen drew a distinction between considering climate change when it came to financial regulation. But how do you see that also potentially affecting monetary policy? Obviously, there have been criticisms of the Fed for buying bonds of oil and gas companies. But leaving that specific case aside, I mean, is there any?
Well, he has an okay camera. Obviously, it's on his laptop, but
going forward.
So you're talking about the Network for Greening the Financial System, which we joined this week, and I'll just say a couple things about that. So first, I'll just start by saying that we're going to move carefully and thoughtfully on developing an understanding.
Time to flip the buy to sell. I don't know.
Including the areas you mentioned.
They are coming down to some resistance at 3,700, but
external constituencies.
All right, do you remember when I was saying just before we stopped the stream earlier, I was like, I bet you all these price action traders are shorting it here, and sure enough, like as soon as I left, they busted up through them.
Set by Congress. We have great responsibilities and strong authorities that really.
So I thought that was amusing.
We're not the forum where all the great issues of the day are to be hashed out, debated, and addressed, unless and only to the extent that those issues are directly relevant to our statutory goals and are addressable through our legal authorities. And
now off the FOMC, they're definitely getting screwed.
Congress has given us a precious grant of independence.
Look at that. So now they're almost, no, it's not quite a new high, is it?
Broad response to climate change is for others to decide, in particular elected leaders. But so let me get to your question. What does all that mean for?
Well, there has been hardly any market selling through all of this, has there?
So Congress hasn't explicitly assigned us or other financial regulators a role, and we're not among the agencies who contribute to the National Climate Assessment, for example. But climate change is nonetheless relevant to our existing mandate.
Oosh, new high of the day?
One of our jobs is to regulate and supervise banks.
No, that's not high of the day, but it's a regular session high.
That's a responsibility we share with other agencies. The public will expect that we will do that. So we'll expect that those important institutions will be resilient against the many risks that they face. Credit risk, market risk, cyber risk. Climate change is an emerging risk to financial institutions, the financial system, and the economy. And we are, as so many others are, in the very early stages of understanding what that means, what needs to be done about it, and by whom. That's why 83 central banks have joined together to share research and identify best practices in this important emerging area. We've been attending NGFS meetings as an observer for more than a year, taking part in the work. We had discussed that it was probably time to join as a member. I'll just say that the financial system is really a global one. It's important that we work and discuss best practices with peer agencies around the world, especially in a field where we're just beginning to develop our understanding. You ask about monetary policy. I'll say this. We have historically shied away strongly from taking a role in credit allocation. In fact, our agreement with Treasury during the financial crisis from back in 2009 or 10 says that we will avoid credit allocation. It's something we've carefully avoided. So I would be very reluctant to see us move in that direction. Picking one area as creditworthy and another not. So you asked about monetary policy. It's for now. I would say the real concern is the real place to focus for me is supervision of financial institutions and then financial stability concerns. You can see a connection there. Monetary policy, maximum employment, stable prices. It's less obvious to me. I can make the argument, but it's less obvious to me that those should be first order things that we would look at in connection with climate change. But I think there's work to be done to understand
the hell is he talking about?
Change and strength and resilience of financial markets and financial institutions. I think that work is in its early days.
Sometimes they wait till he finishes. Yeah, it's true.
We'll be thorough.
Sometimes he gets some crazy action after he finishes.
Engage with the public on all that.
Thank you.
Well, they stopped out the shorts. I didn't because I made my money, but.
Hi, Chair Powell. Thanks very much for taking my question.
Is it going to turn back down now? They go and touch it. They could immediately turn back down.
Just as one example, the governor of Illinois announced roughly 700.
Wow, she's got her fireplace in the background. It looks like she needs a new mirror.
and the latest
Buy a new mirror.
stimulus proposal that's
You ever been to the at-home store? They have amazing mirrors.
aid at this point. And I'm just curious if you can give some detail about the damage that these budget deficits or the lack of aid specifically to state and local governments will have on the recovery, and specifically with the municipal lending facility set to expire, what more the Fed might be able to do to fill that specific hole. Thanks very much.
Okay, so the state and local governments, they provide important critical services: safety, fire, police, health, all kinds of things like that. They're really involved in people's lives. State and local governments are to a large extent.
All right.
The decision whether to provide more fiscal support to them is entirely in the hands of Congress. And, and they're in the middle of these discussions.
Take off the e-mini trade. They didn't make $100 off of it, unfortunately.
What's happened is if you're a state that has a significant exposure to tourism or to extracting...
Reverse. I could reverse. Nah, I'm not going to reverse it.
Or gas, you are probably...
They're just taking a breather. They're just pushing down the ATR stop to... what's this?
Surprised on the upside, we
got some stuff going on.
For example, property taxes don't move much year to year.
I already looked at that.
Kind of sales taxes on goods. Goods sales have been very high. Income has been more or less replaced by the CARES Act, fully replaced, more than in many cases. So the concerns that we had at the very beginning of really serious, deep shortfalls and massive budget cuts on the part of state and local governments have not yet occurred. What we're seeing is
I just felt the moving average support of it.
And some states are having significant difficulties, others not so much. The real concern, though, that still emerges is state and local governments are very large employers, and one of the largest.
Oh, whoa, wait. Is Jay Powell saying that Congress needs to give state support?
By 1.3 million of state and local government. So it's a very large number of people from just that one source. It's actually significantly more than lost their jobs during the global financial crisis. So that is a significant part of that group is in education. So when the schools reopen, a significant part of that 1.3 million would go back to work. Nonetheless, it's a concern. We're watching carefully to understand why that many people have been let go.
So he's not directly saying anything about monetary stimulus, but he is noting that it's a problem.
And I just have to leave the question of what to do with fiscal policy on this to Congress.
Thank you. James Politi.
Thank you, Michelle, and thank you, Chair Powell. You and the Fed have consistently said that the Fed was ready to provide the economy with more monetary support if needed, and really stressed to policymakers generally that the dangers of not doing enough outweigh the risks of doing too much in a situation where there's so much suffering in the economy. The guidance today sort of cements asset purchases for a longer period of time, but is not a big new easing step. Why was now, with the short-term outlook deteriorating due to the new coronavirus surges, not the moment for a big new easing step? And is it because of the medium-term outlook improving, or is it because the Fed just doesn't have the capacity to sort of build that bridge over the next 4 to 5 months for the people who are struggling?
Right. So I could go back, James, to what I said earlier, which is this is a very, very large asset purchase program. It's providing a tremendous amount of support for the economy. If you look at the interest-sensitive parts of the economy, they're performing very well. The parts that are not performing well are not struggling from high interest rates. They're struggling from exposure to COVID. In a sense, these are the businesses where that are really hit hard by people's reluctance to gather closely. So we do have the ability to buy more bonds or to buy longer term bonds, and we may use that. I'm not saying we won't use that. It may well come to using that, but
Jay Powell trying to spoof it.
I would also note Monetary policy works with long and variable lags.
I think that the buyers got the move that they wanted. They're just taking profits.
Monetary policy.
We'll see what they do the last hour after it's done.
Future. So this looks like it looks like a time.
Usually this goes an hour, so.
Policy, and that's why it is a very positive thing that we're getting that. So we remain open to doing, to either increasing the size of our asset purchases, if that turns out to be appropriate, or to just moving the maturities, moving to buying longer maturities, because that also increases accommodation by taking more duration risk out of the market. But we think our current stance is appropriate, and we think that our guidance on asset purchases today will also provide support to the economy over time. Again, what we've done is we've laid out a path whereby we're going to keep monetary policy highly accommodative for a long time, really until we reach very close to our goals, which is not really the way it's been done in the past. So that's providing significant support for the economy now. We don't think the economy suffers from a lack of highly accommodative financial conditions. We think it's suffering from the pandemic and people wanting to not engage in certain kinds of economic activity. And we expect that with the virus that will improve, that condition will improve. Nonetheless, again, we are prepared to use our tools. We will use them at such time and in such amounts as we think would help.
Thank you. Scott Horsley, NPR.
Thank you, Mr. Chairman. Some forecasters have suggested that there is a lot of pent-up demand for travel and entertainment and services and the like that might stop being pent up in a hurry if we do get to a point where the vaccine is widely distributed, and that the beaten down service sector might have trouble meeting that demand in a hurry.
Why does he always interrupt a good short?
Inflation.
Look at this guy. Now this guy
transient problem or
has a bookcase. Now his problem is he needs lighting. He needs lighting.
All the markings of a transient increase in the price level. So you can imagine that as people really want to travel again, let's say, that airfares go. I'm just imagining this, right? That they go up. But what inflation is a process whereby they go up year upon year upon year upon year. And given the inflation dynamics that we've had over the last several decades, just a single sort of price level increase has not resulted in ongoing price level increases. And that was the problem back in the 1970s. It was the combination of two things. One, when unemployment went down and resources got tight, prices started going up. But the second problem was that increase was persistent. There was a level of persistence. So if prices went up 6% this year, they'd go up 6% next year because people would internalize. I mean, really that's what happens is people internalize that they can raise prices and that it's okay to pay prices that are going up at that rate. So that was the inflation. Those were the inflation dynamics of that era. Those dynamics are not in place anymore. The connection between low unemployment or other resource utilization and inflation is so much weaker than it was. It's still there, but it's a heartbeat compared to what it was. And the persistence of inflation, if you get for example, oil prices go up, and that'll send a temporary shock through the economy. The persistence of that into inflation over time is just not there. So what you described may happen, and of course we would watch it very carefully.
He makes a convincing argument there. It's something he just said there to pay attention to. He's telling you something about the way that markets have been moving lately that is useful to trading, right?
An increase in underlying inflation that would be persistent.
So not the kind of thing that the Fed would be trigger happy to respond to.
No, definitely not.
Thank you. Michael Derby.
Question, but what I wanted to ask was, given the size of government borrowing and different regulatory changes in the financial sector, do you think that the Treasury market long run can operate smoothly without some sort of active Fed presence? Buying Treasury debt. I'm referring back to a point that was made by Randall Quarles, he had some questions about that. So I wanted to know where you stood on that issue.
Right. So you were breaking up a little. I think I got the sense of it, though.
Okay.
Yeah, I don't think it's at all a foregone conclusion.
Oh, they're going to go back up there again. Hey, maybe they're going to be long this whole day.
You know, that's not something we're planning on or intending right now.
Well, I want to know why Vladas keeps looking for a short.
It's a time when the economy needs highly accommodative monetary policy, and we think our asset purchases are...
Think that they're overdone? We're not overdone till 37.10.
Balance sheet. You know, there's lots of demand for U.S. Treasury paper all over the world.
Says I was looking for it.
I think we need to be thoughtful about the structure of the Treasury.
I felt like I kind of missed the entry again, but you know, that last one, I probably could have just stayed in that. Kind of knew it at the time, but I was like, I don't want to deal with it anymore.
But I don't presume at all that this is something that needs to be, where the Fed needs to be in there at all. I would think that this should be handled by the private sector and can be. Institutions need to be able to hold this paper, and
3,700 was the short.
Maybe a central clearing angle that would, you know, net.
If you made something off of it, then good for you.
There are a lot of things that are being looked at right now.
Thank you.
Hannah Lang.
We got to give everybody.
For taking our questions. So, you know, as you know, the pandemic has really disproportionately impacted small and medium-sized businesses, and so the Fed launched
Well, she's in an apartment, man.
3 programs to reach out to those companies. But, you know, considering that some of those programs are ending, is there anything else that the Fed's actions can do to provide support to those companies, or is that solely Congress's domain?
I think the main thing that those companies need is a robust recovery, a strong, robust recovery. And so we contribute to that through highly accommodative monetary policy, through accommodative financial conditions that are supporting economic activity. Health authorities are contributing to that through
Ooh, this could be a run here.
Spread of the
it's virus. A big old order at 3701, but past that, it's pretty...
And Congress contributes to that by helping them make it through this very difficult time. And I think my understanding is that there's support for small businesses in what's being discussed on Capitol Hill. I would certainly think that something well worth looking at.
Thank you. Paul LaMonica.
Hi, Chair Powell. I was wondering if you've had any conversations yet with any members of the incoming Biden administration, particularly Janet Yellen, who obviously you can share.
Who he's got the
experience in running the Fed. So just curious.
The art in the back there. But then you've also got a pretty messy kitchen, man.
And the new administration might differ.
I don't know.
Next couple of years.
So, you know, we've had, and I've had sort of the typical.
Look at that. That's a stop run.
Team for Treasury they've met with.
Very nice.
At our agency and other agencies, and really it's about learning what we do. I really have only spoken to former Chair Yellen to congratulate her on being nominated, and just to say that I look forward to working with her. You know, I did work very closely with her for 5 years before she left, and have stayed in touch, you know. So I did that, but I have not to say.
They've stayed in touch, guys.
With her, and I'm not going to do that.
Be just like old times.
Great. Thank you. Jeff Cox.
Yes, Chair, thank you for taking the question. You've been asked this question before in various forums. I'm going to try it a little bit differently now. The equity market and the bond market seem to be telling 2 different stories about where things are heading. We continue this on the stock market.
Oh no, the internet, Jeff Cox, your internet going down.
Concern you at all? And are you getting any more concerned about asset valuation?
This guy is smart, by the way. He writes good shit on CNBC.
You were breaking up, but I think I got that.
And he asked a good question.
So, you know, financial stability. We look at a broad range of things. We actually have a framework so that we can, you know, evaluate changes in financial stability over time, and so that the public can evaluate whether we're doing a good job at it. So what do we look at? Asset prices is one thing that we look at, and you know, we published a report a few weeks ago on that. Maybe it was a month or so ago, anyway. And I think you'll find a mixed bag there. It depends with equities. It depends on whether you're looking at PEs or whether you're looking at the premium over the risk-free return. If you look at PEs, they're historically high, but in a world where the risk-free rate is going to be low for a sustained period, the equity premium, which is really the reward you get for taking equity risk, would be what you'd look at, and that's not at incredibly low levels. So, which would mean that they're not overpriced in that sense. Admittedly, PEs are high, but that's maybe not as relevant in a world where we think the 10-year Treasury is going to be lower than it's been historically from a return perspective. We look at we also look at borrowing leverage of financial institutions. We spent 10 years, and the banks spent 10 years building up their capital. So far, they've been a source of strength through this crisis, and their capital has held up well. We look at leverage in the non-financial sector. That's households and non-financial corporates. Non-financial corporate leverage is high. We've been watching that, but rates are really low. So companies have been able to handle their debt loads even in weak periods because rates are quite low. Your interest payments are low. Defaults and downgrades have declined since earlier in the year. Households came into this very strong, and there certainly has been a hit there for people who are unemployed. But with the CARES Act, Congress replaced a lot of lost income.
What about this background? If you were posting a link, Marty, I can't see it.
The economy gets strong again. I mean, the ultimate thing is
I'm almost having FOMO, yeah. I don't know.
Strong economy.
You know what? I was kind of relieved when I got out of that long, so I don't like being long during these talks.
Particularly financial companies, and that's down to a very low level these days. So the broad financial stability picture is kind of mixed, I would say.
You could still say something that screws it up,
A little high in that metric, in my view, but overall, you have a mixed picture. You don't have, a lot of red flags on that. So, and it's something that we monitor essentially ongoing, almost daily. We're monitoring these prices for that, and have published our framework and. We'll be held accountable for what we saw and what we missed. So we work very hard at it.
Thank you. And for the last question, we'll go to Michael McKee.
Mr. Chairman, I have a couple of questions about the fiscal support for the economy. This year's budget deficit is $3.1 trillion, and Republicans have argued they don't want to spend more because we can't afford it. So I'm wondering if you can make the case for how much we can afford. At what point do deficits and the debt start to have an impact on the economy or on interest rates? And how would we know when we get there?
So people
are you interested? Oh, he's like, I know how to answer this. I'm interested to see what he's going to say.
Difficult decisions, and so we're not charged with providing fiscal advice.
What a dodge
to Congress. But I would just say, as a general rule,
it
is important to be on a sustainable fiscal path. For my way of thinking, and many others, the time to focus on that is when the economy is strong and when unemployment is low.
You're a Keynesian. I get it.
Are pouring in, and there's room to get on a sustainable path because the economy is really doing well. You're still now in the some part of an economic crisis, and the fact that Congress is debating a fairly large bill today suggests that something fairly substantial is going to get done. We hope, but that's what's being discussed is of some size. In terms of what is a sustainable level, I think it's the question is we've always looked at debt to GDP, and we're very high by that measure. By some other measures, we're actually not that high. In particular, you can look at the real interest rate payments, the amount of what does it cost. And from that standpoint, if you sort of take real interest costs of the federal deficit and divide that by GDP, we're actually on a more sustainable fiscal path if you look at it through those eyes. Again, these are.
Oh, now that is interesting.
But
I have to look into that.
I think the case for fiscal is.
So do you catch what he said there? He's basically saying that
gets.
Yes, we have a lot of debt compared to the GDP, but because the rate on that debt is so low, the amount that we're actually paying per GDP is actually not that high historically. I have to look that up. That is a compelling argument.
Because the country can't afford to pay a significant interest.
Yeah, no, this is a good point.
Yeah, I mean, I think we're a very, very long way from that. You know, the Congress has given the Fed independence on the condition that we stick to our knitting. We try very hard to do that.
We can keep the interest rate as low as we want for as long as we want because we
just a very, very long way from that, I think.
Okay.
You know, if we do our jobs well and support the economy and achieve maximum employment and stable prices, keep the financial system stable, I don't think that is something that I would worry about, certainly not in the near term.
Thank you very much.
Thank you.
Good afternoon.
Yeah, just like in Japan. We can just buy all the things. I'm just getting buzzed now. Normally they play the music. Now they're playing the music. Oh, it's very nice music. I wish you could hear it right now. You can go watch it on replay. Event over, you're sad? Oh. Well, it means that we can do something now. We can, like, buy it. We don't have to feel bad about buying it now, right? We can be like, all right, everybody, race to the buy in the close. I didn't say that right. Conclusion, well, you know, he gave us a lot. So here's the thing with the FOMC press conference that I'm starting to notice. From time to time, he will say something that affects the market. But generally speaking, the Federal Reserve Chairman doesn't want to say something that moves the market during that talk. You get what I'm saying? This is why it's such a terrible trade. It's, right? Because Chairman, the whole game here is Chairman Powell is trying to not say anything that the market will react to, and the press is trying to do everything that they can to get him to say something that will move the markets. Right? It's only good when the market is scared. Yeah. So what you get is a lot of like blah, like it doesn't really move the markets, and a lot of it is stuff that for us that live and breathe this every day are things that we already know. But on the other hand, every once in a while somebody will ask just the perfect question, and the Federal Reserve Chairman will tell you something that it's basically like this is the best economist in the world telling you what the markets are doing right now. You know? So like that point that he made that debt to GDP is maybe not the best measure makes a lot of sense. Of course, that changes if the interest rate goes up, but you know, they tell you things that are going to make sense for your trading. So my recommendation to you is don't trade it. Try to pay attention. You'll sleep through it. Come back and watch it again later. Okay, there you go. And look at that. I should have already bought it. Oh well. Oh well. Yeah, they're popping it. They're for sure. They're for sure moving it there. News Squawk. Snap analysis. Powell reiterates cautious tone, says next to 45 months will be challenging and Fed could do more if needed. Which I suppose is why we kind of floated back up a little bit. Overall, though, it doesn't look like that the market makers are really willing to sustain those bids. Especially with the E-mini just going off. Okay, McConnell, we're still talking, and I think we're going to get there. Let me turn back on my news squawk here. Okay, so anyways, I think that we need to get back to the analysis that you all came here for, and that is how Waterworld was really not a failed movie. I'm surprised that it did that poorly. How can, if Waterworld did so poorly, how come they have such an awesome show over at what was it, Universal Studios or whatever it is? They have a great show, and the wave runners and doing the jumps and stuff. I enjoyed that. I always enjoyed that when I was a kid. They still have that? They probably don't even still have it, do they? You say 7 more points. Yeah, well, I still got plenty of room there. They're only at 73.03. I don't know if the risk reward right there is very great, but I bet you could probably still buy it. Like anywhere above this. Oh, look, he moved his order. Okay. Well, I don't know if he matters. He could put it right there. Uzi says no. Somebody's kind of messing with the bid there. Looks like they went through them though. My aunt used to love Kevin Costner. Yeah, you know, he always had good wholesome shows, don't you think? What are some good Kevin Costner movies? Let's go look them up. Let's go. Field of Dreams, right? That was him, right? Oh my gosh, so many. Dances with Wolves. Was that his most famous one? What do you think was his most... Oh, you have Robin Hood? Well, Robin Hood got panned, right? Didn't Robin Hood get panned as well? He's been in a couple of what would you call it? I don't know. I enjoyed Robin Hood, but yeah, and the Dancing with Wolves. Yes. Yes. Have you guys seen The Highwaymen on Netflix? I enjoyed that one. That's about it's about the policemen that were chasing after Bonnie and Clyde. I enjoyed it quite a bit. Untouchable. Oh yes, that's so oh my gosh. Like here I'm on IMDb, like you gotta go way back to get to that. That was like 1985. Yeah, 1987. The Untouchables. So that was probably one of his first big ones, wasn't it? Because all of these other ones that I'm reading that he was in, I never heard of before. Amazing Stories. So that's a TV series. No Way Out. Field of Dreams. There you go. And then Dances with Wolves. And then immediately after that, the next year, Robin Hood, Prince of Thieves. Oh, he was in JFK, the movie? I've never seen that movie. That's the, what is the name of the guy that makes those ones? Oliver Stone. That's right. Yeah, that guy. Wyatt Earp, which is like a poor man's Tombstone. You've never seen that. And then in 1995, Waterworld. The apex of his career. Oh man, it actually did really hurt him because you look after that and there's not a whole lot of really... oh, wait, what? Field of Dreams 2 Lockout? What? That was a thing? Well, that must not have been very good, Ben, because Oh, he's in Molly's game? No, he's not. Oh, I guess he is. I don't remember him being in it. That's a good movie too. If you haven't seen that one, if you haven't seen Molly's Game, that's a good traders movie, I think. Field of Dreams was a classic. It was. Yeah, he's in Better Call Saul. Is he really? You know, that's one that I've kind of been avoiding. No, I don't see that one on here. He's in a TV series called Yellowstone. Yeah, so I haven't seen I've seen parts of Breaking Bad, but I didn't really watch that show. So now I've been thinking, well, maybe I should watch it. It's on Netflix, you know. Maybe the wife would watch it with me. But I kind of feel like that's a big investment and I don't really want to get into it. I don't know. That was a lot of seasons too, wasn't it? How many episodes is that? Breaking Bad TV series. It's 5 seasons. 5 seasons of like what? Of 7 or 8 episodes. So like 40 hours of television. So I could probably get that out in a number of weeks. And then but then after that, you got to watch Better Call Saul. And that's a bunch of seasons too. It's just, you know, it seems like that would take up a lot of my time. Monty says it's worth it. Maybe it probably is. I hear really good things about it. I think that maybe part of it is that, you know, it was like popular at the time and I'm resistant to anything popular. You know, that just makes me think about TikTok. And then I made a TikTok last night. Oh my gosh. So this guy was like, oh yeah, when the RSI, it starts out the video. Oh my God. It made me I just laughed at him in my video. He says, it's like, here's in a way that anybody can easily determine the future direction of a stock. That's what he says. And I'm like, you've got to be fucking kidding me. How can you say this shit? And people eat this stuff up. Like he had a following. I couldn't believe it. It's just this kid. And what was his big secret? You use the RSI, and when it's above 70, you sell it. And when it's below 30, you buy it. So I go in and make this TikTok and I'm like, okay, so if you do that on the S&P 500 and you follow those rules, this is what happens. And I'll show you how bad it is. And it was just like the perfect example, because during the pandemic, it did such a poor job. Like, you realize that the pandemic showed the market oversold, like within like the first week of February and so forth, like before the market really even started going down, when we were all like, the stock market knew about the pandemic and the larger public hadn't really figured it out yet. That was my first year of trading RSI, a noob mistake. There you go. Oh, I get what you're saying. Your first year you traded RSI and you only knew that. Wow. Yeah. Anyways. And so then I was like, okay, what if you just do it on like a set profit and target instead of like 100 points on the S&P 500. So I showed that too. And it was like only when we were crossing up above. I made it so it only takes it when it crosses above the 30, when it's below 30 and it's coming back up. It was so bad because they did that down at the bottom like 5 or 6 times. So it got false signals 6 times before it finally caught the buy. And then after that, it was great. You just hold that one, but it's such a bad trade. And this guy is like, oh, it's so great. All right. So I make this video And this guy almost immediately sees it. I'm like, oh man, do I have to argue with him? Is he going to point all this? Because I'm always worried about, like, these guys are going to say, well, it only works if you do X, Y, and Z. So then we have to go back and program it with X, Y, and Z and then show that that still doesn't work, right? No, he likes the video and he's like, yeah, RSI is a great way to trade for new traders. And I'm sitting here like, I don't even think you watched the video. I don't even think you watched the video. It was pretty amusing. It was pretty amusing. Freaking RSI. Anyways, I've been trying to get myself to like try and post something on TikTok every day or every other day, but I don't got anything. I don't got anything. Unless we're gonna make a video about how Waterworld wasn't that bad. Yes. Oh, we're just streaming the FOMC.
Oh, I was thinking about this for your
Wait. I don't know if you guys could see it, but it's a picture that says "World's Okayest Brother." It's a shirt that says "World's Okayest Brother."
I was gonna put it in one of those gag gift boxes too. I like the roto butt whipper.
That's what we should do for him next year. Is we get him one of those green visor things because he's going to be graduating as an accountant. Oh, we got to do that. Do we got to get something for all of them this year, huh? Oh wait, do we have rules this year?
No.
No rules this year? I remember there being rules last year and being frustrated by them. Hi, baby.
I didn't abide by any rules. I don't remember any rules.
She just said, "Oh, what they can set whatever rules they want. I'll just ignore them." Hi.
So should I do wait?
Sure.
Or should I try to make
Wait,
it?
how much is it?
It's $17. Or should
Do
I
it.
try to make it?
I probably won't be able to make it cheaper than that for any appreciably cheaper. The amount of time that you will spend making that yourself.
Well, I have the silhouette cutter.
Oh, that's yeah, but do you have like a, the stuff to actually print onto the shirt though?
I have black and white iron on, but I don't have a shirt. But I could probably go get them. Probably won't be as nice a shirt as this.
And then you have to get a $17 shirt. So you're not going to find a shirt at the store for $17 usually, are you?
Oh, for 10. You might have a solid color.
I don't know. Or you can go into the link in the video description and get the what? Hey, baby. Can you hear him?
Gosh dang, I already wrapped it. I had a medium shirt that would have worked forever.
I gotta get your thing, but I'm like trying to figure out like, should I? Ooh, don't want to run over your foot. I'm like, should I just tell her and get it, or should I try and be secret about it? I have to buy it on Amazon. Yeah, I don't know. I don't know what I'm gonna do. And then after you get the thing, you're probably gonna want to buy other stuff. So I'm like, maybe I should just tell her what it is.
Here we go, $11.99.
Because she usually tells me what I'm getting. Although she does keep some secrets.
I was gonna say you. Know
She does keep some secrets, but the secret ones are usually not like, they're usually things that I would never think of.
I have lots of things for you.
Oh. Well, you're getting one thing.
Here we go. I can get this one for. I do really want to use my cutter.
It's going, yeah. It went okay. Look, they're coming back down. They're coming back down. I do remember the E-Trade, baby. You're the right age and everything. Those were funny commercials.
Apparently everybody in Centerville is a medium.
Is a what?
Medium shirt.
Do you eat an Oreo? What's that on your shirt? It looks like an Oreo. You've never seen the movie Waterworld, have you, right? With Kevin Costner?
I don't think so.
It's good stuff. We were just talking about that today because apparently it was like a critical failure, and it really hurt Kevin Costner's career.
I got a plain gray and a plain green. Medium and gray. Medium.
Can you believe this? They're gonna get him the world's okayest brother shirt, and we can't even spend $17 on it. We got to make it ourselves. Oh, okay. You want to make it? There you go. Yeah. Oh, you know what I still want to do is I want a trader's gonna trade hats. But I looked it up, and like getting a hat to like print on a hat, it's not like, to really do it right, you need like a hat press or something, and it's not cheap. But we could start printing hats for people. Maybe that would be a thing then. 1999 a trade. Oh, that's right. That was the commissions, and that was like cheap, huh? Oh man. It really is something else how they've brought down the transaction costs in stocks. You think that the not the Federal Reserve, but you think that the government will ever come in and say, hey, you know what, selling your customers' order flow, that's not okay. And then if that were to happen, oh no, it's falling. Do you see it? Do you see it? I don't know if I don't think he was reacting to that, but he was reacting at the right time. Look at that. They're unhappy. Uh-oh, below 97. Okay, well, they might try and hold the liquidity there. I think we're okay. That was the market on close report. $111 million to the buy side. The murder algo. It really drives me crazy when people call it the murder algo. It is not an algorithm, guys. It is a report. It is multiple market participants reacting to a report. And when you call it the murder algo, I understand that's why people call it that, but do you know why y'all call it the murder algo? Because people didn't know what it was, and so they started calling it that at the beginning. Like the whole term is rooted in ignorance. So call it what it is, the market on close report. That way, I don't want you guys, you know, I love you and all, but you represent this channel, and when you're going out there, I want to make sure that you guys sound intelligent, you know, and I you know. Don't teach the newbies that it's a murder algorithm. It's the market on close report, and it's an important thing to look at. Well, do you think that they're going to take it below 27.5 for me, or what? I may just have to close it right there. In fact, since this isn't going to happen, let's just well. I'll put those there just in case. Okay, educate or elaborate. I have a video about it. But essentially, there is a type of order called a market on close order, which means that you will take whatever the settling price is at the close of the day. When you submit a market on close order, it goes into this system and it sits and it waits there. And the traders can look at this information. So all throughout the afternoon, these guys are getting updates to the market on close, okay, if they subscribe to the data. But at the end of the day, which is 10 minutes before the close, is like the cutoff time for you to submit those orders. And then we see at that point how many market on close orders are outstanding, right? So this time there's 110 million looking to buy. And so they know that they're going to have to absorb all of that. But how do I say this? So there's all of these orders that basically have to be absorbed. So the market makers have to sell so that they can get back into these, you know. They basically drop the price so that they can buy it and then sell it back to them. Yeah, 100 million is kind of small. It's not huge. It was actually a larger reaction than I would have expected, of only being 100 million. Anyways, so if you come in and you get a really big market imbalance, then you'll tend to have a really big move there at that. And you can, you know, tells you something about how it happened. It also tells you something like, because people will try and push prices, right? So if there was a really big imbalance on the close and it closed above a significant level just barely, I'd be skeptical about it, right? No, don't grab my headphone cord, bud. You can grab my headphones now. Marty says I just subbed. Wait, are you? You must be a different Marty. We have another Marty that comes in every once in a while. Yeah, eventually if Edge works every week, someone takes advantage, and next week it might not work. Yeah. And that's the other funny thing is that I didn't even know it was a thing. It wasn't something that people ever really looked at because the Edge had already been taken out of it until the pandemic came along and they weren't on the floor. And then apparently they weren't getting that information, and so it wasn't being arbitraged out. And all of a sudden all the retail guys are like, oh, there's some murder algorithm has just shown up. It always happens at the same time. I didn't know what it was. The first time I saw it, I was like, what the heck? Because I don't trade at this time, right? First time I didn't know what it was. And then finally somebody told me market on close, and I was like, okay. And I went and I did the research. If you want to know more, so I have that video, and I have a bunch of links in that video on the channel. But the New York Stock Exchange has quite a bit of information about it because the closing auction is actually like one of their big selling points, is that these really, really large institutions can make extremely large trades at the close of the day without having to have this huge impact on the market because there's just so many people set to make a trade at that time. Okay, take the baby with you. Don't just leave me with him. Okay, bye-bye. You go. It's time for you to go. Bye-bye. The wave, bye-bye. I don't want to go. No, you have to go back to prison. That's why you're in prison clothes. Bye. You don't lock the dog in either. So she does. She locks the dog in anyways. Okay, well, even though this is all profitable and everything, I just want to really point out that I'm not particularly happy about how that all went. It could have been way better. I mean, it was down here. I could have taken a ton off and then wouldn't have been worried about when it was coming up here and stuff. And I don't know. Of course, I didn't know where it was going to go, but I had one short order on MESH at 05. Just, oh, I bet. Well, that's a good $50. Good job. You could add another one after that. You're really aggressive. You had a good account already. Okay, so happy to be out of my positions here. We will watch the close here, and then I'm gonna shut it down. I'm gonna get back to more important things. You know what's something that always bothers me? So people say trading is 90% risk management. Figuring out entries and exits is the easy part. Managing risk is how you don't lose your capital. And it's like, okay, so like I can add contracts and I can take contracts out. Those are entries and exits, right? You don't manage risk without managing entries and exits, guys. This doesn't make any sense. Are you on every day? I'm on every day at 8:20 to 10:30 Eastern time. Usually in the morning. We're only on at this time today because there was the FOMC. So okay. Well, that was a lot of selling going into that. Close. Boom, boom, boom. Okay, well, I was just thinking, is there anything else I want to say? I don't know. Maybe I'll try and make a video. I don't know if I'll do it today. Maybe it'll be a weekend project. We can make a video about the FOMC. But I will see you guys tomorrow. Thank you. Nice to meet you, Marty. Yep, so tomorrow morning, I will see you guys then. Make sure you hit that like button, subscribe to the channel, click the bell icon. Get your mugs in the video description below. Traders can trade. Because they're so much fun and it makes you feel like, you know, part of the crew. That's why I like it. So, I'll see you guys tomorrow. Stay profitable, friends.